Today we'll be talking about Franklin India Smaller Companies Fund. It's a small cap fund, and this particular fund has generated a return of over 36% in the last 1 year. Now, if you had invested 10,000 rupees since its inception, your investment would have turned to 75,700 rupees, right? But had you invested in the category of funds, it would have generated 77,525. That's nearly 2,000 more than this fund has generated, right? And also, if you can see that there has been multiple partial managerial changes which are represented by these particular drops, right? Now, coming to investment details, I've always mentioned that there are few parameters we should focus on. The first one is the exit load, that is 1%. If you exit the fund within 365 days, that is 1 year. The minimum SIP amount is 500 rupees, that's perfectly fine. The expense is 1.79 in the regular plan, and the direct plan it would be around 0.6 or zero point 0.7 less than this particular expense ratio. The turnover is quite good. It is 23.79. Considering the category of fund, the turnover is quite good. Turnover means how often the portfolio gets churned, right? So the turnover is 24%. That's quite appreciable. Coming to the asset class, the particular fund invests 93.97% in equities, and the rest is with the rest 5.85% is in cash, right? When you talk about the factor profile, it's quite evident that the style of investing is growth oriented, right? Yield is definitely low because when you get a fund that has an investment style of growth, the yield is usually low. Uh, this particular fund always plays on momentum, so momentum is high. Quality is appreciably high. Volatility is average. Liquidity is quite low, so that's a point of concern. Size nearly small, you can say. So smaller fund has advantages, smaller fund has disadvantages. So you should always dig deep into the fund fundamentals so that you can have a bigger picture of the overall scenario, right? Coming to the risk analysis, you can see the Sharpe ratio is more than the category, right? The beta is nearly the same. The alpha is much more than the category. So in the risk analysis phase, this particular fund is quite good, which can be seen through the rank within the category section also. It is ranked 5 out of the 22 funds in this category. Coming to the beta, it is ranked 8 out of 22 funds. Coming to alpha, it is ranked 5 out of 22 funds. The exposure of these funds, maximum exposure is into the industrial sector. Then comes the financials, then consumer cyclical, healthcare, basic materials, and so on. In this particular slide, you can see that the category percentage, right? Like in the industrial sector, all the category funds invests nearly 29.5%, nearly 30% of their allocation. This fund also invests 30% into industrials part. But if we see the, let's say, financial services, the category invests 13.7% of their fund into the financial services sectors, but this fund invests 20%, 21.7% into the financial services sector, which is a cyclical sector. The four sectors that I mentioned, that is basic materials, consumer cyclical, financial services, and real estates, are cyclical sectors. So you should always be more focused about the sectors your fund is investing, right? The top 10 holdings are as follows. I'll just repeat the top four companies: Equitas Small Finance Bank, Brigade Enterprise, Deepak Nitrate, and Kalyan Jewellers. So this fund has entered into Kalyan Jewellers since May 31st, but the portfolio weight is quite heavy as compared to, let's say, Karur Vyasa Bank, in which this particular fund holds 2.36% portfolio weight. Coming to the most important parameter I like the most is the capture ratios. When it comes to upside capture, this particular fund is at par with the category average. Coming to the downside capture ratio, this particular fund has performed badly as compared to the category average. The maximum drawdown duration has been 6 months, which is from January 1st, 2022 to June 30, 2022. When it comes to the maximum drawdown, this particular fund has generated minus 13.7% drawdown, whereas the index has generated 10.65% return. Coming to the concentration of funds, this fund has 88 stocks. And if you see that the top three sectors have generated 41.39%, means the top three sectors occupy 41.4% of the concentration, right? So that's quite top heavy or sector heavy fund. The fund managers are R. Janakiraman, right? He has been associated with the company with this particular fund since its inception, and Akhil Kaluri has been associated with this fund lately, that is nearly 2021 or 22. So, what is MoneyQuest's analysis? What is our analysis? See, as I told that R. Janakiraman is a seasoned manager, is a seasoned fund manager. He has been associated with this fund since its inception, right? So, his particular methodology of fundamentals-driven investment strategy is the most appealing, you can say, attribute of this particular fund. And this fund has also performed well since its inception, or since when R. Janakiraman took over this fund. This fund has outperformed 70% of its category peers. And what's more interesting is it has outperformed with less volatility. That's the most important part. Now, we all know that small or micro cap funds are quite risky. They are quite volatile, right? And but if you see that this fund has also performed well when compared with its peers, right? This fund's basically approach has been more towards due diligence of any company before they invest. They focus on companies with low leverage, healthy ROE, free cash flows, and someone that's a company which has a consistent growth. R. Janakiraman typically avoids companies that don't have an established track record, right? Because if you don't have a track record of performance, then it's quite risky to invest people's money into that particular company. But we all know that small and micro caps are tricky beasts, and there are risks of running such funds, especially during market conditions like COVID, market conditions like recession, or any such unfavorable market conditions, right? There have been market conditions when a particular manager's investment style has gone out of favor. So there are chances. Historically, this has there have been multiple occasions where a particular investment style of a particular fund manager has gone out of style or out of favor. So if you basically analyze the performance, it has underperformed in 2020 and 2021, whereas there have been many funds which have outperformed or performed brilliantly in these 2 years, right? Another aspect which you should be closely observing is the SEBI's order, in which it has penalized this particular Franklin Templeton. You all know about this fund house. Basically, it has penalized on the issues faced on the fixed income side of this fund. We all know about that